Hello, and welcome. Have you ever picked up a company's annual report and just felt completely lost? Like you're trying to read a foreign language? Well, you are definitely not alone. But what if I told you it's not some secret code? It's really just a storybook about a company's year. And today, we're going to go on a guided tour to learn how to read that story together. Let's dive in.
It's the big question, right? We see stock prices bouncing all over the place, we see their flashy ads, but deep down, what is a company really worth? The truth, the financial truth, is actually hiding in plain sight. It's laid out in just a few key documents, and we're about to learn the secret language to unlock them.
So I want you to think of these statements as your own personal superpower. Seriously, they give you this kind of financial X-ray vision, letting you see straight through all the marketing hype in the headlines to what's really going on inside a business. And look, these documents aren't just for Wall Street pros. They're for anyone who wants to make a smart decision. They're kind of like a time machine, right? They show you where a company has been. They're like a GPS for where it is right now, and they're a telescope for where it might be going. But really, they answer the most important question of all. Is this company actually making any money?
Okay, so to get that X-ray view, we need to focus on three key documents. These are the absolute foundation of any annual report. So let's meet the big three.
So first up, we're going to look at the income statement. Then we'll check out the balance sheet, and we'll wrap things up with the statement of cash flows. Each one tells a totally different but totally crucial part of the story. And it's only when you put them all together that you get that full picture.
All right, our first stop on the tour, the income statement. If you want to know how a company performed, this is your go-to. This is the part of the story that boils everything down to one simple question. Did they win or did they lose this year?
I absolutely love this way of thinking about it. The income statement isn't just one single moment, it really is a motion picture. It shows you all the action, the sales coming in, the expenses going out, over a whole period of time, like a quarter or even a full year.
So the formula here is actually incredibly simple. You just take all the money the company brought in, we call that its revenue, then you subtract all the money it had to spend to make that happen, those are its expenses, and whatever's left over, well, that's either the profit or the loss. It's that straightforward.
Let's look at a really simple example here. As you can see, the total income right up at the top is $38,000. From that, we subtract the total expenses of about $11,500. And that leaves us with the most important number on this page, the famous bottom line, a net income or profit of over $26,000. That's the big win for this quarter.
All right, let's keep it moving. Our next stop is the balance sheet. And, if the income statement was a movie, well, the balance sheet is something completely different.
That's it, exactly. This is not a motion picture, it's a snapshot. It literally captures a company's financial position on one specific day, say the last day of the year, freezing that single moment in time to show us everything it owns and everything it owes.
Now, the balance sheet is built on this one simple, unbreakable rule, the accounting equation. And it basically says this: everything a company owns, that's its assets like cash, inventory, buildings, it all has to be paid for somehow. And that money only comes from two places. Either it's money the company owes to others, like a bank loan, that's a liability, or it's money the owners themselves put into the company, and that's the owner's equity.
And here you can see that equation in action. Notice the total assets are just over $200,000. And now look at the other side, the total liabilities and owner's equity. They add up to the exact same number, right down to the dollar. I mean, they don't call it a balance sheet for nothing. The two sides have to always balance.
All right, let's get to our final and, you could argue, the most important stop, the statement of cash flows. This right here is the ultimate reality check for any business, because at the end of the day, cash is king.
Now, this statement is so critical because of a pretty surprising fact. A company can be profitable on paper, but still go bankrupt because it runs out of cash. That's right. So this statement cuts through all the fancy accounting and just follows the actual money. Where did the cash come from, and where did it really go? And it tells this story in three parts. First, you've got operating cash flow. That's money from the main day-to-day business. Second is investing cash flow. This is money spent on big stuff like new buildings or equipment. And third is financing cash flow. Money from things like taking out new loans or selling stock.
So there you have it, a full tour of the big three statements. You now know how to read the basic story. But reading is just the first step.
To really understand what's going on, you need a few simple tools for your toolkit.
This is where financial ratios come into play. Just think of them as simple calculations that turn all those numbers into some really powerful insights. For instance, a ratio can tell you not just that a company made a profit, but how efficiently it made that profit compared to last year, or even compared to its biggest rival. They really do help you read between the lines.
Now, there are tons of ratios, but they usually answer one of a few key questions. For example, the quick and current ratios are all about liquidity, which basically means, can the company pay its bills next month? The debt-to-worth ratio tells you about leverage. Is the company relying too much on debt? And others tell you about profitability, which brings us to one of the most famous ratios of all.
Let's just zoom in on return on investment, or ROI. It's one of the best for measuring how profitable a company is. It answers a simple but incredibly powerful question. For every single dollar the owners have invested in this business, how much profit is it kicking back in return? A company with a high ROI, well, that's a very efficient money-making machine.
So we've given you the map and some basic tools for the journey. You now have the skills to open up any annual report and see what's really there. Not just a bunch of numbers, but a real story of strategy, of challenges, and successes. The only question left is the one right there on your screen. What story will the next annual report you read tell you?